This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Tripp Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
All right, well, welcome to the podcast today. We're excited that we have kind of a full studio here. We've got Tripp, who is here with me in Dallas, Tim and David in Houston in the studio there, and the four of us are going to be talking about being partners and what that's looked like kind of post-COVID as Tripp and I have moved from Houston into Austin and Dallas, and then really just what we see as the future of DMRE and what we're excited about. So, guys, welcome to the podcast. It'll be a good conversation today.
Yeah, I think last time we talked a lot about COVID and about, Tom, you going and starting the DFW office, and then Tripp starting the Central Texas office, and just the challenges with that, the huge opportunity you both saw, and then going and really being successful over the last, I guess it's been almost 5 years now in those offices. So I thought a good place to start is, when COVID hit, kind of how all that impacted us, and then we pivoted from a very difficult market initially with COVID to actually going and really rebuilding and hiring a lot of people. I think we tripled at least in size probably in 18 months following COVID. So I thought that might be a good place to kind of start, going through that. A lot of people probably didn't have that reaction to COVID of kind of drilling down and saying, who do we want to be as a company? What's our 5-year, 10-year plan? How do we go execute that?
Yeah, it's interesting because having hindsight, seeing that COVID really was the impetus to just incredible growth for DMRE. When we first went through it, it kind of seemed like the world was ending. And so I remember it being really a difficult time. And I would say probably what I remember the most is how much I appreciate having partners, because I can't imagine going through that by myself. But there are so many calls that we had, even though we were working remotely, but just calls we had as a partnership, praying together. We got advice from some guys that had been in the business and been through some big downturns, but it was still really hard because no one had been through something like COVID, where it was literally, nobody was on the roads, there was nothing going on. And we just, I remember the models that were saying, millions and millions of people are going to die, and just how horrible it could get very quickly. So there was a moment in time there, I think, where, the only thing you could really do was get on your knees and pray and then, wait to see what happened the next day. But you're right, Tim. It ended up being an incredible opportunity for growth. And I think that having you and David and Tripp as partners, just encouraging me, and then hopefully I encouraged you guys. I think that just us together, we were able to get through that. But I remember that was a really difficult time early on.
I think what was kind of critical is I remember in the summer of 2020, so COVID hit, I think in March. And so the first couple of months, it was just trying to kind of get our feet back under us. We had a lot of deals fall out, just a lot of question marks on where we're going. But there was some stability kind of by the summer. And we actually hired a consultant for the first time. I think maybe the only consultant we've ever hired as a company, which is kind of interesting. But a guy who, at the time was getting up in years. I think he was in his late 70s, but super sharp guy. He had consulted with a lot of our partners over the years at ARA, and I think consulted with them when they started investment firms. But, very seasoned real estate guy, been through a lot of stuff. And I think the benefit of working with him was it made us think a lot. We kind of took our business and basically said, let's almost start over again. Let's think from the ground up. How do we want to build this company? Where do we want to be in 5 years? Where do we want to be in 10 years from now? And the funny thing is, I think he asked a lot of really good questions, and he had definitely had a process and kind of some ideas for us. I don't know that we actually adopted anything he said. I don't know if you remember, Tom, if we did or not. I don't think we did, but those conversations, I think, really brought us together and made us think about how do we want to build this company? And then the company just exploded really from that point on. So that was a pretty big inflection point, I think, as a partnership and as a company.
Yeah, I think one thing that consultant did that I thought was really, really well was he asked some of the really, really hard, difficult questions that we probably didn't want to meet head on. But by asking those, he made us think of those questions and what we would do and how do we want to handle it and how we want to move forward. And really, as a partnership, to Tim's point, a lot changed. Not with our relationship and our partnership, but within DMRE and kind of our vision for how we want to grow it.
Yeah, that's a good point, David. I think we have something that's really unique as a partnership. And part of that is we're all really different from a personality standpoint and a strength standpoint and what we bring to the table. But we've always, I think, just gotten along really well together. We really appreciate one another. And we've really tried to avoid having like a scorecard, where I'm, it's like, well, what's Tim doing? What's David doing? What's Tripp doing? Because we know and we trust that each of us is doing everything we can to make the team and really the company better. And we just have that belief. And that's a pretty amazing thing to have because, and I think the consultant helped, like you said, ask some hard questions. I think most partnerships break down because that's not the way it is. There's not a trust. There's not like a bigger picture. There's not a long-term commitment. And we've always said from the beginning, we're going to go through things in life, and we've gone through things in life, health issues, starting families, getting married, all these things where you maybe have more time or more opportunity to lift things up at different points in time. And there's other times where, if you're dealing with health issues, the partners need to come around you. And we've always been okay to do that and to pick each other up. And during that time in COVID, I think because we had that trust in one another, we were okay with, well, Tripp's going to move to Austin. Tom's going to move to Dallas. This is going to leave a pretty big gap in Houston because Tom and Tripp were really running just a lot of the production in Houston that was on the buyer side when we're representing clients. And, it was a belief that was the right move and a trust in one another.
Yeah, that's a great point. We had run the company almost as two separate teams. Up to that point in Houston, there was a listing team, which David and I were running, which was just handling all the listings. And we would get involved a little bit in buyer rep, but really that was what Tom and Tripp were leading. And they've been very successful with that. They had built a team around them and just got an incredible market share in Houston. And so the opportunity was, let's go be a company across, three, large cities, cover the Texas Triangle, just an incredible kind of aspirational move as a company. But that was going to be a huge burden on Tom to actually go be successful in DFW. We knew that was going to be a fight and a lot of investment. And then for Tripp, the same thing in Central Texas. And then for David and I, really having to kind of rebuild the Houston office and figure out we got to hire some people. We got to get more involved now in buyer rep, still be involved on the listing side. And so I think all of us got stretched. It was actually, I remember it being kind of a scary time and a difficult time, but a really healthy time of personal growth. And, all right, how are we going to do this? We know we can do this. We want to be successful, we want to grow. And it's probably one of the next 2 years, I'm very proud of our company and our partnership team of how we navigated that and the success that we had in that time frame.
Yeah, one thing to add to that, I think kind of our goal when we did start DMRE was to diversify geographically. And I think what COVID did was sped up that timeline. I think without COVID, while COVID was an awful thing, I think it probably would have been another maybe year or a couple years before we started DFW in Austin. And I think that really sped up that timeline and kind of, not for lack of a better way to put it, kind of pushed us to do it quicker. And I think it was a good decision, to get going when we did and not wait a couple more years.
Yeah, David, I think there was it was kind of a blessing in disguise because I think you'd mentioned it earlier, but there was, a ton of deals that dropped out in those new prospective markets and also in Houston. And so it allowed us to, take advantage of that and go insert ourselves into the market because it created a lot of opportunities in Dallas and Austin and even Houston when we left. And, because we knew the market so well, we were able to go in and, gain control of a lot of those sites that had dropped out of the fear of COVID and not knowing what was going to be happening in the future.
We were actually doing stuff in those other markets, but we weren't having the success that we wanted to have. And we realized pretty quickly when Tom moved up there and Tom moved up to DFW, Tripp moved up to Austin, that you need to have boots on the ground to have the kind of success that we were wanting and hoping to have with our brokerage business.
Yeah, I remember, Tripp, we had put together a plan. I think I was in Colorado one summer, and like I normally am when I'm on vacation, I'm thinking about the company and strategy and what we could do. And so I put this plan that was kind of like going and living on the moon,
Yeah.
but from Houston.
Right.
And so the plan was that we were going to build this incredible buyer rep business from Houston, and we were going to cover, I think it was like 10 markets. It was like Atlanta and Florida, the Florida markets and all these different
Nashville,
markets.
yeah.
And like David, like you said, we were able to go do some deals and have some inroads, but we realized pretty quickly that it's just really different. I remember you would always say, Tripp, in Austin, it's just like a local market. And our clients would say that too. I remember the Odin Hughes guys would say, so many of the deals we're doing in Austin, like we're going to breakfast with some guy and he's got an opportunity and that's how the deal happens. And then the guys from out of town are saying like, we never see those deals. They never get to us because whoever the local guys are see them all.
Yeah, I'd say it's still like that today too. It's definitely a good old boy market. Still a lot of handshake deals where you're going and meeting with landowners directly, clients directly, and a lot of those deals don't ever surface to meet the public market. So,
and I always felt like the perception of Dallas from Houston, which that's its own thing, just the competition between the cities. But to me, the perception was always, well, in Houston, you can kind of go through hard work, make something of yourself. Dallas is like a country club market where you really can't break in. It's not really what you're doing; it's who you know. And fortunately, I think we've seen in both of our cases, it's really more about the value that we're adding to our clients. We have a really unique value proposition, and so we've been able to break into difficult markets, two of the largest markets in the country, by really just taking the same playbook that we developed, all four of us together in Houston.
Yeah, and I think even in Austin too, it was pretty unique because historically it was so much smaller than Houston and Dallas. There was very few, if any, brokers that were solely focusing on land, and so to be able to come in and start with a small team that's solely focused on land with a heavy, at the time, heavy focus on multifamily land, allowed us to grow very quickly and get a foothold because of the way the market was structured or viewed, if that makes sense. So.
I think one thing that was kind of surprising maybe for all of us is, when COVID hit, it really shook the business up. And you would have thought it would have been a long, slow recovery. I remember in the summer of 2020, we were talking about distressed deals. Remember, we were all getting on the phone calls talking about, what's going to hit, what big kind of portfolio this distress is going to hit. There's some crazy different ideas. We're working on stuff out of like in California, different markets. None of that happened. And what actually happened was the opposite. We had one of the greatest runs that we've probably ever seen in 21 and 22. The multifamily market got extremely hot. Build-to-rent came to Texas. I don't really know that there had been a lot of build-to-rent in Texas before that time, but it really hit Dallas hard in Central Texas, a little bit in Houston. And then industrial just blew up. I mean, industrial developers started paying almost triple the price for sites that they have been paying. And so maybe we can kind of talk about that because I think we went from, having to kind of separate to 3 different offices, rebuild, hire some folks, triple the size of our company. And then here's this opportunity that's just an incredible opportunity to go have some banner years for DMRE in 21 and 22.
Yeah, no, that's good. I think, Tim, one thing I think about as you're talking about that is we're so fortunate that we have these client relationships that a lot of our really embedded multifamily clients, they started industrial platforms and we started doing a lot of industrial deals with them. And the challenge for Tripp and I when we started in our markets was we could go do deals right away. Like we could go find good land sites. We could go, get a deal done with Endeavor or Odin Hughes or Trammell Crow in Austin or, those same groups here in Dallas. But it was really hard to get listings because we just weren't really known in the market. And so we were getting some listings, but it was difficult. And you and David, and we talked about this in one of our earlier podcasts on just the history of the company, we really built our Houston team on just a brand of, if you're thinking about the most quality listings in Houston, DMRE is likely either listing those properties or we had the opportunity to list them. And so for us, we really wanted that same opportunity. And we realized the way we were going to have to get there is we're going to have to just go do as many of these deals representing clients as we could. But that was really hard to break into at first because you are the new guys in town. We hadn't really listed anything and we had to prove up that we did have a listing process and we had relationships and we just had an awareness of how to do the business to where if we get the opportunity, we can knock it out of the park when it comes to a listing. And so obviously today, both of us have a big track record of, closed over 100 transactions in our markets, Lots of those are listings. We've set some pricing records on listings in Dallas and Austin now, and run a lot of process deals. But that really comes to mind because that's a big part of breaking into a new market. It's easy to like steal a deal here and there. It's pretty hard to really break in and show that you have the right to list properties continually.
And Tom, something to add to that, when starting a market, from a buyer rep perspective, buyer rep side of the business is the way to understand values the most, because you're making, a lot of offers for buyers across a bunch of different use types. So you're getting real-time data on, what these developers will pay for land in, a certain submarket. And so that kind of really helps you when you go out and pitch, a listing, how are we going to value this property? What the real-time data is from industrial developers and multifamily developers and single-family for rent developers who y'all have been representing and making offers for in the market.
Yeah, David, that's a great point. We probably have 2 to 3 BOV pitches at least a week in Austin, and we get that question asked all the time. How are you valuing our property? And majority of our competitors, use land comps, right, which is great, but the market that's changed in Austin over the past 24 months since 21, 22, it's altered a lot, and we utilize the buyer rep data so often to value those sites. So while we can show them comps from 2024 on a deal that was put in title 2 years ago at the peak of the market, it's just really not a valid data point. And so when we can show that we're making 8 to 10 offers a week on any given product type on land, it really shows what the market is today for that land value. So that's a great point.
I think something else, kind of going back to as we were coming out of COVID, we were building the team. We saw a huge need to grow the team. Tim, you already referenced it. We tripled the size of just personnel at DMRE. A lot of that was building up these new offices. But something else we did in the fall of 2020, when we were still kind of in the throes of COVID, like we were coming out of it, but the market hadn't fully responded yet, because it really didn't really respond until 2021, and then it just went on fire. But we decided that we really wanted to press into our own proprietary technology. And so prior to that point, we had always tried to use kind of every off-the-shelf piece of software we could to get an advantage. And we realized that, we're a team. So we had 7 people, then we had 14 people. And then as we were growing and tripling the size to closer to 40 people, to work as a team in our business, information is so valuable. But it's really, how do you transfer that information across the team? And then how do you catalog and remember that information? And then not only that, but how do you have that information start to work for you? And we realized, doing that with an off-the-shelf software just wasn't going to cut it. And so we hired a software developer to start developing what we now today call the Factor, which is DMRE's proprietary technology that we use internally for all of our research, with all of our team, for all of our information, data, and then we use it with our clients to help our clients make decisions, and also with landowners, helping landowners as we're valuing their property. But that was a big commitment that we made, because you think about putting ourselves back in those shoes in 2020 when COVID hit, and all of our deals, which were mostly deals in Houston at that point, we also had negative oil prices. So we had deals extend 6 months, 12 months right off the bat, which we know in our business, if a deal extends 6 months, it's not closing sooner than 6 months.
No.
So from a revenue standpoint, like revenue just got destroyed in 2020. And then we hadn't had time yet in Dallas to really build up a pipeline, and people weren't looking to go do fast deals unless it was crazy distress. And, Austin was similar. We had some stuff in the pipeline, but it was going to be hard to see that come to fruition. So we really had to invest ahead, not just from a personnel standpoint. And we've always approached that differently, in that we pay a lot of salaries because we want to see people, we want to get strong employees, and we want to get them trained up, and we don't want them, living off of just a 100% commission in a market like COVID where none of them would have survived. So we had a lot of salaries we were paying. And then we said at the same time, let's go start investing which at the time was hundreds of thousands of dollars in this technology. And now that's, snowballed into millions of dollars that we've invested in the Factor. But we just saw the opportunity. And I think when we talk about, when David says, even though COVID was a horrible thing, the result of what it allowed us to do was incredible. It's more than just the fact that the market kind of froze in time. A lot of it is just our willingness to invest ahead, because it was a lot of our own personal time. I remember for me, I spent all those months in COVID, even when, it was all social distancing, getting up at 4:30, driving to Dallas from Houston and touring the market all day. I'd pick up Trey, or I'd take John or Kenneth or someone with me, and we would just tour the market all day, driving, 16 hours. And then I get back to Houston. So it was a incredible opportunity to learn, but also to just invest a lot. And then when things turn back on, I think for a lot of the competition, it was, okay, well, now we can kind of start working on deals again. And for us, it was, okay, we have all these tools now. We have this software that we've never had before. We have a new team. We still have our same process that just got a lot better. And now we have this incredible understanding of the market. Oh, and by the way, for the last 6 months, we just got to know every developer that's doing deals in these markets. And so there's just a lot that went into that. And even talking about that, kind of get excited. It's fun. It's fun to think back on the challenge of sitting and brainstorming on what's the right way to approach this.
Yeah, Tom, my hat's off to you for that. Tom was kind of the champion behind all that. Tim and I, being the old men of the company, we had to give up our Google spreadsheets that we were so used and accustomed to use over the last 15 years.
I was going to add to that too, Tom. It wasn't just spending the money on the technology. It wasn't like there was some prototype or some model. It was having to go figure it out. It was going to a software engineer who knew nothing about our business, and then trying to communicate what we wanted to have happen and trying to figure out what we wanted to have happen, and then get them to do it, and then learn through a lot of mistakes that sometimes it didn't work, ways that they were doing it didn't make sense. We had to keep constantly revising it, changing it. It all costs a lot of money. So it wasn't a super smooth, easy process. I mean, it was really creating something, and none of us are tech guys. None of us were necessarily super into that side of it, but we realized the importance of it in investing in it. And I think, like you said, doing it when it was hard to invest in it, when we would have rather just held on to that money and not, spent the money during a very difficult time in the market.
I remember I bought a book. I think it was like Software Investment for Dummies, but it really was because I had always heard horror stories on, people trying to develop things and then it was way over budget and didn't do what they wanted it to do. So anyways, whoever wrote that book, I appreciate it. It had some really good content in it, but you're exactly right, Tim. I mean, we tried to learn everything we could. We tried to, invest as much of our own time in it as we could. And then as the market heated up, we saw the need to really bring that more in-house. And so, we were really fortunate when Brad joined the team in 2022. So really 2 years after that. And that's taken it to a whole nother level now. And I don't even know what version of the Factor we're on, but what's fun, I think, about developing software, seeing it developed, is you wouldn't even recognize today what we had back in 2020, which probably didn't release till 2021. But you really wouldn't even recognize it. And what I think is exciting is I don't think we'll recognize what we're going to have in 2 years because of just what's happening on the technology front and our willingness. The four of us, I think, like you said, David, you guys have always been willing to say we're willing to put the money there and we're willing to do it, even if we don't fully understand it. We just know the value. And I really appreciate that about all four of us, is that we all have a little bit different view, but we all want to see the improvement, and we understand that that's the world we live in. Technology is moving at such a rapid pace. It's going to be hard to even try to keep up. We want to keep up and be as far ahead as we can.
And starting to implement things like AI and bolting on different technologies through time. I think what the Factor is going to become, like you said, is going to keep multiplying its impact on our business and within the company. So it's exciting to think about where we'll be in the near future with that.
Well, and to your point, Tom, it was either what do we do with this money? Like Tim said, we could have just held on to it, but we all knew it was very clear, where can we get the best return on our money? And it's invested in our business. And to the point you just made about technology, it's either get on board or get left behind.
Yeah.
And it's happening in our industry like it is in so many industries. Our industry might be a little slower than a lot of other industries, but it's happening right now as we all speak.
Yeah, that's a good point, David. And I used to say that, we just don't see a lot of technology, utilized in real estate, and that's changed a lot just in the last couple of years. I mean, you're really seeing some pretty big advancements, which I think because we have a willingness to embrace that is fun, and we understand that you're just going to have to roll with it. And then as much as we can be on the front end of that.
Maybe we can talk about the kind of the transition. So we had COVID, we had 2 really hot years, 21 and 22. And then, very quickly we had a major market adjustment that actually happened starting in the summer of 22 and kind of gaining steam in the fall of 22, where interest rates started spiking. Just an unbelievable rise. The Fed raised the rate a couple hundred basis points, changed the math on all of our deals on the investment sales side of the business. And so, again, we had a ton of deals falling out. We were just, we had really had so much momentum going as a company. We had, I don't know if we had 100 deals fall out. We had a ton of deals under contract that no longer made sense. I mean, within a couple of months, there wasn't really a way to save them. The math was different. We had high construction prices or costs, and then, high interest rate costs at the same time. And so that was a pretty big storm to go through as a company. Just as we're establishing these new offices, we've hired a lot of people. Now our revenue is getting hit really hard, and now we have to try and adjust and figure out, how do we go replace that revenue when the deals, that we were doing don't make sense anymore. And a lot of our clients didn't know what to do either. I mean, they were struggling. I mean, a lot of them got out of the market for a period of time. So we can kind of shift and talk about that.
Well, and to maybe set the table even further, Tim, to add to that, we also started an investment platform around the same time. That also actually did come from that consultant. He had really encouraged us you guys need to start an investment side to what you do, where you guys are actually doing deals yourself. And there's a way where you can do that and you can work with your clients. And it's complementary. He talked about just how we had these offices across the state and this data. So on top of what you're saying, we also had this new investment company where we had just bought several properties. And, really, if you looked at the timing of when we bought those first, 6 or 7 properties, it was all like technically the height of the market because the market hadn't fully adjusted.
It was all 22, right? I think we went under contract a little bit in 21, ended 21, but then 2022, we kind of hit the ground hard, raised a lot of money. And like you said, we went and bought, 6 or 7 properties
that year. Yeah.
Yeah.
And so there was a lot. I mean, I think we all personally had a lot on the line, just with the time we had invested. And it's even hard to think back now and realize that what I said earlier, we didn't really see the market come back till 21, and then it shifted by the middle of 22. So it was only 18 months, and again, when you're in these good markets, you just feel like it's going to be good forever, and when you're in a bad market, it feels the same way. But it's amazing how quick that went. And we've been sitting in that kind of market for the last now 2.5 years, which is, a lot longer period of time.
Yeah. With Ascent, I think we had spent around $30 million on those 67 properties. And then we were actually in October of 22 gearing up to go raise another $30 million and close what we called Fund 1, which I think was 6 more properties. And so it was a really challenging time because October is when everything started hitting. I mean, rates have been kind of coming up the last couple of months. The market was definitely shaken, and then it all just kind of blew up in October. And that's when everybody just started dropping deals. We felt like we were just kind of going off a cliff, and then we had to go raise this money and go start trying to do some more deals on the investment side, in addition to shoring up, the brokerage business. So it was I would say, from our career standpoint, one of the more challenging times, I think, to try and navigate that as a leader, going through that time.
Yeah, and it wasn't an isolated deal either. It wasn't just one market. It was across the country. So, it's not like we were just feeling it in Houston or just feeling it in Dallas or Austin. We were feeling it everywhere.
Yeah.
One of the things that stands out to me during that time with that shift was I think we really looked again at our planning as a company and thought about where do we want to focus. And the thought again was, let's really spend the majority of our time focusing on Texas and the Texas Triangle. And, we had just launched a Phoenix office at that point, which we still have, and we're doing deals out in Phoenix, but we had plans to maybe go launch another 6 to 7 offices. And I think to your point, David, we saw that that interest rate hike, it hit all the markets really the same, where it just crushed them. but we saw Texas is probably still the place you wanted to be out of any other really markets in the country. And so with the new investment arm and with what we were doing on the brokerage side, we really just started to realize, let's really focus on Texas where we can grow our presence, doing more deals. So we were investing a lot on industrial, single family, and then also, let's go get more listings. We had more and more landowners just realizing the value we could add by marketing their properties, because it's not the old strategy of, I'm either at a big shop, so I'm just going to kind of blast it to a network, or I'm going to put a sign up, or, this is this small submarket I work in. It's really if you want to get your property in front of developers, like in front of who's buying sites, who's paying the big numbers, who's closing deals, hire us. You have a young, hungry group of people that are going to go work really hard. And so fortunately, we started getting that kind of business, and it really allowed us to really grow that pipeline. Whereas, again, any kind of market correction, I think we saw a lot of our competitors kind of take a step back and dial back. And I think what we've always said is you work harder when the market's down than you do when the market's good. You work really hard when the market's good, but when the market's down, that's the real opportunity. You're not going to see the short-term, revenue,
Yeah.
but that's where the real opportunity is long-term.
Yeah, and I think it, something we've done really well is we reinvest in those low times, and it also forces you to be pretty creative because it's hard to get deals done. And I think that's made us extremely successful coming out of that. To your point, it's in the short term, you don't see it immediately, but when all of your competitors, are letting people go or definitely not hiring and kind of pulling back, we had the validity to go in and invest more time and energy and money into the business. And I'm super grateful for you guys, being able to, see that and, take that chance. Cause we all have a pretty good idea that the market comes back, when. We don't know exactly when, but it creates a great opportunity to reinvest into the business. And it also forces everyone to grow, in that team environment. It creates this, this energy to go out and, alter your systems and processes a little bit. You might not be doing as much multifamily land. You might be doing some more retail or investment tracks, and listening to the market and what the market actually needs, and having that grit and determination to go get deals done and still service our clients and these landowners when times get pretty tough is, it's pretty special.
Well, I think we've always had a really long-term view of things. And so, even as we look to the future, we've always operated our business all cash, no debt, and thinking about there's going to be peaks and valleys. Like there's going to be cycles. That's the business we're in. So let's hire really good people. Let's give them opportunities. I started as an analyst. I'm one of the founders of DMRE. I'm a partner. Tripp, you started as an analyst. You joined you came over with us at DMRE. You're a partner. We have other guys in the company that they've had similar rises, which is incredible. And so just thinking about, how do we build something that's longer term instead of just, how do we grow really, really fast, do some deals, and then, maybe not even exist a couple years later.
Yeah, we've seen a lot of that. I was going to say, what's always important when you go to these downturns is to take what the market gives you, especially in the land business. Sometimes it's shifting to a different use type or different type of deal. And what was really counterintuitive about the interest rate spike is what I would have told you, what I would have thought guy would get hit the hardest was single family for sale product, because now the mortgage rate's going from 3%, 3.5% at 30-year to 7%, 7.5%. And so it completely changed the math for those guys. But what happened was we saw one of the biggest booms, I would say probably the biggest single family boom we've ever seen. And I think we were able to really kind of adjust as a company in all of our offices and do a lot of really big deals. In Houston, we did probably a couple thousand acres of these massive single family, developments, master plan communities, a lot of smaller, single family for sale product deals. But that was really what the company kind of survived on. And a lot of our fees came from across the company the last 2 years, which is kind of surprising with rates going up, the way that they did, how well that business did.
Yeah, that was definitely a shocker. I was right there with you, expecting the same thing. I think, one big component of that is the state that we all live in. Texas has led the population growth for 14 consecutive years. We added 500,000 residents in 2024. And, I think that's going to continue. And so because of that, there's been a major shortage in the housing here in the state of Texas. And I think, we're going to continue to see that kind of growth here in the Texas market and specifically the Texas Triangle.
Yeah, I mean, I think as we think about 2025 and where we've come, and we've talked about just how difficult the market's been. And I think, I was pretty discouraged. I think this was late 22, early 23. A client told me, well, I guess it survived to 2025. And I was like, golly, that's like in 2 years. And I'm like, that's a long time. And now we're here.
Yeah.
And I think what's exciting is we've done a lot more than survive. We've actually, speaking for our Dallas office, we've actually grown revenues every year, which I'm really proud of. I'm really proud of the team that we have up here. Really thankful for the market we're in, just because Dallas has been such a good market. But as I think about the future and this new cycle we're heading into, where I don't know how long it's going to be, but I think we're heading into a big growth cycle. I think the four of us probably would say that maybe it even started, late 24. But Tripp, why don't you talk about our values? Because I think as we think about the future, there's a lot of opportunity to come work at DMRE.
Sure.
We're looking right now. There's several roles we're trying to fill. We're also trying to fill some roles on the Ascent side, but it really starts with teamwork and it starts with our values.
Yeah, absolutely. I'd love to. Humble, hungry, smart is, the pillars of Dosch Marshall Real Estate. And, we say this over and over again as we've interviewed hundreds of people now. But finding that right fit is so key. And I'll dive into a little bit of what exactly I mean by that. The humble and the hungry piece are pretty self-explanatory. Having that humility, being coachable, being in the team environment, so vital for what we do as a business and our systems and processes and what make us so unique and ultimately successful. That hunger is having that inner drive to win and to achieve our clients' goals and putting our clients first, and ultimately willing to go above and beyond, right? And then the smart feature is not as much book smart. It's a lot more of like a social IQ, knowing when to speak, when to listen, being able to communicate. Our business consists of hundreds, if not thousands, of conversations with landowners of all different types. Land is a very unique asset class in real estate because you're dealing with, a farmer that's had the property in their family for hundreds of years, all the way to, Blackstone, that's an institution, and everyone in between, all different types of cultures. And so having that high social IQ and being able to connect with people, because at the end of the day, we're in a people business, right? That's kind of the background on Humble, Hungry, Smart, and how important it is to DMRE and our, it's ultimately our values. It's what we live and breathe every single day, and I think what makes it so successful in working in the team environment.
Yeah, we're always striving for that. And Tim, you were saying the other day, I thought it was interesting, and maybe it's because sometimes when it's the one that's lacking, we say, oh, that's the most important one. But you were saying the other day, humility, you feel like is so important. And maybe that's like a cultural thing, that it's just hard to find it. But if you're going to be a good teammate, I think humility, I don't know if you want to expand on that at all.
Yeah, I don't remember exactly what I was saying, but I think humility is something, at least for me, that hopefully improves with age. We actually have found some very young people with a lot of humility, which is really incredible and very refreshing. I think in general, the younger generation, there's not a humility. There's I need to be kind of at the top right away. I've earned this, even when people haven't earned this. There's a sense of entitlement. I was definitely that way when I was younger, and it took some re-education, being a part of really good teams, having good leaders lead me, where that kind of changed in me, and there's a humility that comes in saying, you know what, I can do much better within this team environment, looking to the other people on the team and gaining from them, and trying to support them and encourage them and promote them, and not just be promoting myself. And so I think you can be very hungry, which you kind of have to be as a broker. You got to be driven. And you can be smart and good with people, but if you're not humble, you're going to be kind of a disaster on a team. You really can't be on a team. You're eventually going to get kicked off the team or leave the team because it just isn't going to be a fit. So I think that's one of the biggest things to look for. And I think real humility is seeing the value in other people on the team and weighing that as high as your value or maybe even higher. And I think the natural human tendency is to value ourselves higher than everyone else, and then tend to kind of look at maybe the negatives in other people instead of the positives. And so if you can come to things with a humble mindset, you're going to be a great asset to any team or to any company. And actually, it's kind of counterintuitive because when you're not looking out for yourself, you're actually going to end up getting way more at the end of the day than when you're the person who's trying to get. We've seen that so often in our business. The guys who are trying to get it all for themselves end up with a lot less. And the guys who kind of come in willing to give and willing to help and willing to share end up getting a lot more just given to them at the end of the day. So it's pretty cool to see that happen.
Yeah, that's really good. And, hunger is another one we talk a lot about. It might be because in our business, you don't run across as many people that aren't smart from a relational standpoint because they're just more drawn to it. They're definitely there. But hunger is one that, I'm personally a very hungry person. I think a lot of us are like that. And so when you're looking at that in other people and when you don't see it, it can be frustrating. And I think that's just another area where you said it, Tim, on another podcast, but this isn't a 9-to-5 job, and if you're going to get into brokerage and you kind of think, serve me, serve me, serve me, punch in, punch out, this is kind of a comfortable life. That's just not really how it is. It's a lot of fun, but you've got to be willing to really get in, roll up your sleeves and grind. I think we see it a lot of times as it's not work, it's fun.
That's right.
But it still is work, and it's still a big commitment. And so that hunger, I think, is why probably every other analogy I'm using is like a football or a basketball analogy,
right.
Where it's just like you've got to have hunger if you're going to be successful on a team. Nobody wants to be on a team with the person that's riding on the coattails of the other person.
Mm-hmm. And what I'd add in addition to team as we kind of look to the future of DMRE and where we're going, really in the recent, I'd say last 18 months, we've really transitioned to start trying to grow leaders within the company, and not just people who are leaders from a title standpoint or responsibility standpoint, but starting to share ownership across the company and across all of our offices. And that's something we're a big believer in, not just keeping it all kind of for ourselves, but growing people that really exhibit, that teamwork and those values, who are really invested in the company and desire to have ownership in the company and to lead the company. And we think there's a lot of benefit of actually seeing the company as an owner and not just as an employee and maybe as a high producer or a leader, but not someone who actually has a vested ownership and sees, man, we spend a lot of money, we make a lot of investments in the company, and we want people seeing kind of both sides of that. So that's a really important thing that we want to continue to do as we move forward into the future.
Yeah, that's a great point, Tim. And that's, we have to give credit, more advice that we've gotten as we've really just sought out people that have been in the business a long time that have grown brokerage companies, to say, it's not about finding people that will just come work for you that are kind of superstars that are going to go, potentially close a lot of deals, but then it's more of a free agent mentality. It's like, if I can get a better offer, I'm going to go get a better offer. It's people that really believe in the platform and in what we're trying to build and do, and they can benefit from it by really committing to it. And so, yeah, we've seen that, and I think we've seen the benefit of that type of an attitude. And it's honestly more fun to work with those kind of people because you really feel like you're all pulling in the same direction.
Absolutely, yeah. And the glass is always half full with those kind of people, which is really nice. It allows you to bounce ideas off of each other and really like grow and learn and not only be humbled by the market, which can be very humbling, but humbled by others, other teammates, and you're working shoulder to shoulder in the trenches with these guys, and kind of to your point, if you hire the incredible quarterback, but you don't have an incredible offensive line or an offensive line at all, you're not scoring any touchdowns, you're not getting any first downs, and we're constantly trying to move the needle, and I think that's why we reference the team sports so often, because we work the same way.
I've thought about that a lot. Quarterbacks take so much credit, and you never see an offensive line taking any credit.
Yeah.
It's pretty amazing. Those guys, and they're working so hard. I mean, I know that's a tangent, but I've thought about that because I'm like, man, we see it, I think, in business where people just take credit. But it's like, wow, those guys that are in there in the trenches, they don't get enough credit, honestly.
Oh, yeah. I think that's why the quarterbacks always get them cars or Rolexes or whatever every year.
Yeah, take care of them.
They take care of those guys.
It's just recently the left tackle is one of the highest paid players on a football team. That's something it wasn't that way 20 years ago. That's something that's kind of new.
Getting rewarded finally. I think another thing looking in the future is technology. We talked about that already in this podcast, but we've already invested millions of dollars. We've spent thousands of hours building and refining over and over again. And Brad, I'm sure we'll interview Brad at some point about our technology and about kind of future goals. But I think we're at a point where it's so exciting because I think the amount of growth and progress we're going to make on the technology side is going to really move forward in a pretty profound way. And I don't know how much you want to get into that, Tom, as far as what the near-term plans are, but rolling it out to clients, allowing them to use our technology, and so we can maybe get into that a little bit.
Yeah, I think we have some exciting initiatives we're working on around technology, and just what we've developed over time with the factor. We've just developed those building blocks to where there's a lot we're going to be able to do with it, and it's exciting because as ChatGPT and different AI tools are coming out, and then as they're advancing and progressing, there's things we can layer on top of the factor, but what makes the factor so unique is really the information that we have and then the way that we can use that information. So I think AI, I think that, like you said, Tim, we have ideas around how we can allow our clients to interface with it more, because that's a common request that we're getting from our clients is, they'll come and meet with us and we'll explore the factor with them, and they really want to be able to use that themselves. And so we've kind of wondered over the years, like, how could we do that? Is there true value for them and just the cost that we'll incur trying to make that happen? And I think we're figuring out ways that we think we can do that. And so if you're a client listening and you think that would be valuable, definitely send us a note as a little bit of encouragement, because that's something we're working on, and there's a lot of investment that'll go into that. But I think technology, it's gonna be really fun to see where we are in 12 months and 5 years, just what that's become, and how we'll be using that too on the investment side with all that we're doing there.
Yeah, maybe transitioning to the investment side, with Ascent. I think what's exciting about Ascent, we're in the middle of raising another fund. We've done a lot of deals now, even the last couple of years in a downturn, made a lot of really good buys. And maybe to talk briefly about starting to see a lot of opportunities to work with our clients, where they're bringing us deals to help them capitalize, to land bank sites for them, to joint venture deals with them. So that's been pretty fun too, just getting to have different conversations with the same clients, really meet a need that is a significant need for them right now of capital that is discretionary and capital that can fill a place in the market where there's not a lot of capital. So I don't know what you want to add on that, Tom, but that's a pretty exciting opportunity.
Yeah, I think that seeing Ascent as a complement for what we do on the brokerage side, that there's so much opportunity that we have to go invest a lot of times alongside our clients, or to just fulfill a need in the market from a capital standpoint. Maybe that's taking a land tract down like we've done already with Ascent, and then turning around and giving a client the time they need to go execute, where we're really mitigating risk for them. They can have the time they need to put their deal together, closed in construction, and it's a great return for our investors. And then, I think we're really excited about some just really, really high quality clients that are approaching us saying, we'd like you guys to work with us on some of these exciting development opportunities. I think, Tim, you said it yesterday, but we see this as almost like a once in a decade opportunity to go get into some of these development deals, just because of where the capital markets have been. We're sure we'll do a podcast on that, but we're just sitting in a really interesting time from a capital market standpoint. And it's fun, like you said, to have conversations that aren't just, here's a land site, do you want to buy it? But, here's a capital source that we have, and this could be really mutually beneficial.
Mm-hmm. Absolutely.
Well, guys, I think this was good. This is probably one of the longer podcasts we've done, so we'll probably call it a day. I know that we could talk because we all enjoy being together. But Tripp, Tim, David, this was great. Thanks for all joining today, and looking forward to the next one we do together.
Sounds good. Thanks, guys.
Thanks, guys. Appreciate it.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.